Welcome, everyone. I'm Corin Cooper-Stevenson.
And I'm Marianne Pearl.
We're with the Lawyers Insurance Fund. Today, we're going to do something a little bit different. Instead of the usual loss prevention tips that LIF often provides to CLEs that are relevant primarily to the lawyers who are attending, we're about to deliver a message to you that we think is relevant to every lawyer. And here it is. There are potential risks that you face in private practice, regardless of the type of law that you practice. And because those potential risks can turn into unpleasant realities, effective risk management means being aware of them and whether or not you're insured. If you're not, you can either avoid those risks or buy insurance on the commercial market. In the next 15 minutes, we'll explain how you can safely get under those insurance blankets for the claims and activities that put you at risk and sleep easy. As this is just an overview, and because we're lawyers too, we have a couple of disclaimers for you right off the bat. First, a legal disclaimer. Of course, in the event of any claim or potential claim, it's the actual policy wording that governs. And second, a personal disclaimer. Marianne and I are fully aware that you may not be as excited as we are about terms and conditions of insurance, so we've done our best to lighten this up a bit, as you will see. So let's start with what we call the company blanket, otherwise known as the compulsory policy. You'll see that our standard issue blanket isn't just one color, but actually a smart-looking tartan. That's because the compulsory policy, the policy that every lawyer in British Columbia in private practice must buy from the Law Society, actually provides you with three different types of insurance under Parts A, B, and C. We'll talk a bit later about Parts B and C, but let's start with Part A, professional liability for negligence.
Most claims against lawyers seek damages for the losses caused when lawyers are negligent in providing legal services. Under Part A, we pay both indemnity, that's settlements, judgments, or repairs, and defense costs for those negligence claims. We'll pay up to $1 million for indemnity and defense costs for each claim. And if you make different mistakes on different matters, we'll pay up to $2 million in any year. As you are aware, every insurance policy has terms and exclusions, and Part A is no different. For example, you aren't covered for personal or business interest claims, although we do offer an optional business innocent insured coverage policy that provides some protection for the other lawyers at your firm. We also don't cover you for pure investment advice, or if you act only as a conduit for funds. You are also not covered for fraud or intentional acts, although we'll provide some protection to your innocent partners, and we'll pay your defense costs if you're sued in an action for defamation. However, the Part A coverage is very broad in other areas.
First, as you can see from the list, Part A picks up other activities you might engage in or services you might provide. Some of those activities, such as acting as an executor, must be connected with and incidental to your law practice. You can also practice any type of law anywhere in the world, and as long as you don't have a permanent practice as a member of another bar or law society outside of Canada, and you're not offside anyone else's rules, you're safe. And in Canada, a special deal. You can practice up to 100 days each year in other common law provinces without becoming a member. But if you are a member, you pay only one insurance fee. And what if you make a mistake that's not discovered until after you leave private practice? You're protected and it doesn't cost you a penny, so you can enjoy those happy retirement days. And you don't have to worry about the future because your estate is protected as well. Now, if you are insured under Part A of the policy, don't jeopardize your coverage. Meet your duties to report claims and potential claims immediately, cooperate, including any coverage investigations, and obtain our agreement before, for instance, making any admissions or attempting any repairs. So that's Part A. Let's turn now to other risks that you might face, both as a practitioner and as a business person, and the insurance that's available to cover you. Now, we'll give you some information about excess and other commercial insurance, but you will need to talk to at least one broker to determine what's best for you and your firm. This is critical given that there will be differences between insurers and brokers about the risks that policies cover, the cost of coverage, and generally the policy limits, sublimits, aggregates, and deductibles. You can find a list of brokers on our website.
The first risk, big claims. The $1 million Part A limit gives generous financial protection for the majority of claims that lawyers face, but it may not be enough to protect you and your firm. If you make a mistake that leads to a claim that costs more than $1 million to defend and pay, you and your firm will start paying for that claim as soon as we hit our limits. For example, if you miss a limitation period to commence an action for a client that suffered a significant brain injury from a motor vehicle accident, you may be liable for some millions if that's what the client would have ultimately recovered as against ICBC. We can tell you that each year we receive a number of reports of claims that, if successful, would exceed our Part A limits.
So if you're at risk of a big claim, buy excess. An E&O, for errors and omissions excess policy, extends the Part A $1 million limit for defense and indemnity by an additional $1 million, $2 million, and sometimes much more. You buy it for your firm as a whole, not for the individual lawyers. Now, when you talk to your broker, there are 3 key terms that you will want to discuss with them. Number 1, how much excess, if any? This assessment is based on factors such as your areas of practice, how often you act on large transactions, and any potential liability you may have for the mistakes of partners or former partners. Number 2, how long do you need excess? You need to ensure that you're protected when a claim is made. Excess coverage is generally triggered by the discovery of a claim as opposed to when the work was done. And number 3, coverage for other risks. Some policies will extend not just the Part A limits, but also the limits for Parts B and C as well. And some drop down to respond to risks that our policy doesn't cover, such as employee theft.
Our next risk, a loss of trust funds. Because you hold money in trust, you are at risk of someone trying to get at those funds. First, someone might steal from you. A lawyer might cross a line and dip into trust funds, or an assistant or paralegal or someone that you contract with might steal from you. Some of you probably heard about a high-profile theft last year of $7.5 million from trust by a sole practitioner's bookkeeper. And unfortunately, there have been others. Second, instead of stealing, some fraudster might trick you or your staff into willingly paying out trust funds through the intentional misrepresentation of some material fact. We're aware of 2 types of social engineering frauds that have hit BC lawyers. First, the bad check scam. You've all received emails from fraudsters on this one. They purport to be real clients, wanting you to help them, say on a collection matter, so they can trick you into depositing and paying out on a bad check, often a certified check that looks real, but is actually a well-made fake, leaving your trust account short. And second, the phony change in payment instructions scam. This trick caught one BC firm earlier this year. The firm was acting for a vendor in a real estate transaction and received the sale proceeds in trust. The firm had instructions to pay out the vendor's existing mortgage. They received an email, apparently from the lender, giving revised instructions to send the funds to a different bank account. The firm sent the payment on in the millions, only to later receive a call from the lender asking where its funds were. A closer look at the email showed that it was from an address that was identical to the original email address except for one letter. There are also other frauds. For example, you might not willingly pay out trust funds because of a fraud, but your bank might. If, for instance, a hacker plants a virus in your system that gives the hacker fraudulent access to your online banking. Protect yourself. First, read the email notices the Law Society sends out when a new fraud comes to light, as well as the extensive fraud prevention material on our website. And second, find out about insurance.
Now, there is some coverage provided to you for 2 of these risks through our standard issue compulsory policy. As we said at the start, it provides you with 2 other types of insurance separate from Part A for negligence. The first is Part B and replaces the former Special Compensation Fund. That provides you with coverage for lawyer theft, both your own and that of another lawyer. Now, obviously, if it's your own theft, you must repay that loss. That coverage has per-claim limits of $300,000. Part C provides some coverage for certain trust shortages caused by social engineering scams. It will respond if, for instance, you're caught by the bad check scam that involves a bad certified check or similar instrument. Note that it won't kick in if you pay out on a fake regular check. This coverage has limits of $500,000 and is subject to a high deductible of 35% of the claim. There are also other terms and conditions requiring, for instance, compliance with the Law Society's client ID and verification rules. Now, the coverage provided under Part B and C may well not be adequate for you and your firm from the risk of crooks. So again, buy a blanket if you're at risk. A crime or fidelity policy insures you for theft of trust funds or securities by a lawyer, a non-lawyer employee, or third party. It responds to internal and external frauds and theft. It can also provide you with two other coverages that are sold only as part of a crime policy. The first is social engineering fraud coverage. Part C provides you with some cover, but as we've just explained, it's limited, so you want to consider this commercial product as well. The second is funds transfer fraud coverage. It will respond if your bank is defrauded and funds are removed from either your trust or your general account. And again, some excess policies also provide crime cover, and some will extend Part B and C limits of the compulsory policy.
Our next risk, data breaches. We have seen data breaches in the recent news, whether it's Ashley Madison, the US Democrats, the BC law firm that was hacked and paralyzed by the crypto wall virus, or the two New York law firms who made the news after the hackers were fined $8.8 million for insider trading. The hackers planted malware on the firm's computers and were able to access emails relating to pending mergers and acquisitions. It is clear that data breaches are becoming an increasing risk. The consequences of a data breach for lawyers are particularly severe given our duties to safeguard confidential information, both in electronic and paper form. Someone might get that information by hacking a computer, by stealing a laptop or a client file left in the car, by planting malware, or even, as we heard some years ago, rummaging through client files that were destined for the shredder that ended up blowing around downtown Vancouver. The breach might result in a loss to your client. For instance, if their identity is stolen or their system is compromised because you inadvertently transferred malware onto their computer system. But a data breach will also create huge headaches and expense for you. You'll likely face costs relating to notification, IT infrastructure, and IT forensics. And you'll be on the hook for any ransomware demands that lock down your data. And appreciate that ransomware demands quadrupled in 2016 and they're forecasted to double again in 2017. You can assume that law firms will be targets. Our message is twofold. First, this is a risk that must be managed. So you want to ensure that you have the IT and other support you need to keep your information and data secure. And second, because there is no cover under the compulsory policy, it's not intended to respond to the business risk of data breaches. You absolutely must consider buying insurance for these risks.
And that would be a cyber policy. Whether the breach occurs in the paper or the electronic world, this new and constantly evolving coverage doesn't just provide you with coverage for claims by third parties, it also provides coverage for first-party losses, such as the costs that you will incur in the result of a breach. It can also include assistance from experts who can help you sort out what you need to do in the event of a breach.
Our next two risks both relate to damage. First, bodily injury and property damage to third parties arising from your operations and premises. A commercial general liability or CGL policy responds. And second, loss of property and assets and business interruption due to fire, earthquake, and other perils. A property policy responds. These policies are often both included in a commercial office package. And the final two risks and policies are, first, claims against you as a law firm employer for wrongful employment practices, employment practice liability or EPL policy responds. And second, claims against you as a director or officer of a law firm for mismanagement of the company and other risks, a director and officer's policy or D&O policy responds. These are often purchased together, and some excess policies also provide EPL policy coverage.
With that, our overview is complete. But if you want detailed and comprehensive information about anything that we've reviewed today, you can find the LIF section of the Law Society website under Support and Resources for Lawyers. I suggest you start with our publication cover pages, hot off the presses. It lists the risks that we've talked about today and the insurance available both through the Law Society and through the commercial market. Now, in the insurance program and coverage sections of our website, you'll find more information about the compulsory policy, and it includes a plain English guide to coverage that we call My Insurance Policy Q&A. As indicated, we also have a list of insurance brokers there for your reference. Finally, the other section you want to be aware of is our fraud prevention section, where we list all of our fraud risk management tips. If you have any questions, please don't hesitate to give us a call. You can find all of our contact information on the website. But we'll finish off by saying we hope this short presentation has met its goal to help you sleep at night, warm and cozy, knowing that you're protected. And remember, cover pages makes perfect bedtime reading. Thank you for your time.
Thank you.